Hi and welcome, it's Steve Johnson here, Chief Investment Officer at Forager Funds, and today we're talking consumer discretionary stocks with Gaston Amoros, Senior Analyst on our Australian Fund. Hi Gaston.
Hi Steve.
Been a crazy year for the consumer discretionary businesses. Gaston, maybe we'll start with this time last year and what was happening out there on the market. Some stocks performing very well and others very poorly.
Yeah, Steve, I think the market was very quick to distinguish between the winners and the losers, with the winners being anything that had to do with online and the losers being the guys that were predominantly exposed to physical stores, right? Or obviously travel and tourism. And what happened was the winners got like initial upgrades, they got earnings upgrades, then the multiples were rated, so they moved up very quickly, and the losers got the flip side of the coin. So they got downgrades, and then the multiple was derated on top of that.
So we had those companies doing well and being priced like it was going to happen forever. They've come back a long way over the past sort of 3 to 4 months, and then some of those businesses, and we were pretty active in this part of the market, but some of the businesses in the travel space, for example, were priced like they were never going to make a profit again at some points in time, and they have largely recovered. There's a third piece of the puzzle here that's just been the strong consumer environment in general has benefited them, and I guess you could call them late cycle beneficiaries here. What sort of businesses are in that space?
So that's right. So I guess you can call them late cycle consumer names. These are particularly the names that are exposed to the housing sector, or the names that are exposed to the automotive supply chain. These are big ticket items that typically tend to do well when consumers feel like consumer confidence is pretty high, wages are going in the right direction, unemployment is coming down or is low, and credit is widely available, right? So, and these are the Nick Scullys, the REA groups, the domains, the car sales, and all these businesses currently are trading very, very strongly.
Look, you've had a massive levelling of the playing field here with the high flyers coming back to earth and some of the underperformers really recovering. How are you seeing that overall environment at the moment?
Well, so there's been a little bit of a reversion. The initial winners now have taken a pause. I mean, some of the share prices have stalled. In some cases, they have come back quite substantially, and that could create interesting opportunities, while the market is now more focused on some of the laggards that are now starting to pick up the pace.
I think that there are opportunities out there to buy some structural winners and some high quality businesses where the whole sector is being treated in a very similar way. So you'll see plenty of those in our portfolio and a few stock reviews over the coming months. Thanks for tuning in.